Hello, everybody, and welcome. My name is Polita Clark. I'm an associate editor and columnist at the Financial Times. And I'm very pleased to be here today because I know at COP28 we have all heard a huge amount about fossil fuels, renewable energy, the negotiations. Is the conference going to end on time? But we're here today to talk about an issue that really doesn't necessarily grab the headlines quite as much as a lot of other aspects of COP28, and yet it is fundamentally important when it comes to the fight against climate change, and that is insurance. So I'm joined today by Ethiopia Tafara, who is the Vice President and Chief Risk and Sustainability Officer at MEGA, which is the World Bank's multilateral investment guarantee agency. Madeline Thompson is the Head of Climate Impacts and Adaptation at Wellcome, which is one of the world's biggest health charities. Michelle Liez is the chairman of the Zurich Insurance Group and was previously chief executive of Swiss Re. And Avinash Persaud is a special envoy to Mia Mottley, the Prime Minister of Barbados, and a prime mover behind the Bridgetown Agenda, which is the move that Ms Mottley launched really in Glasgow in 2021 at that COP to reshape the global financial architecture to make it fit for a net zero world. So I'd like to kick us off by asking a really basic question to each of you. From your perspective, why is insurance such a fundamental ingredient in the fight against climate change? I'm going to start with you.
I'm not sure I'm the right person to start with because I think one of the things... So I come with a different perspective than my colleagues here, and Barbados, we're big fans of the Insurance Development Forum, of MEGA, of Wellcome. But we often get asked that we should be more insured. Developing countries are generally underinsured. And insurance plays a very important role in economic development. Indeed, I moved from London back to Barbados. And one of the things that struck me very strongly is that developing country people live very risky lives. Those at the edge of the poverty line live the riskiest lives. It takes one, delayed bus, and they lose their job, and they are then plunged into poverty because they can't afford their health payments. So this is a world in which insurance plays a very important role. But climate change is an uninsurable event. Insurable events are those events in which you can spread the premium across time because the event is not rising in terms of its probability, or you could spread it across different risks because they're not correlated. And insurance and climate change is the exact opposite. It's increasing certainty of rising risks, increasingly correlated. We now have floods and droughts in the same year when previously we did not have that. We now have seawater incursion happening at a time of droughts. We now have sea level rising impacting our tourism industry and a range of other things, sargassum seaweeds that were previously uncorrelated. And so our response to that is threefold. So firstly, we need to make the system more resilient to these risks. So that's why we've been pushing pause clauses in every debt instrument. When a disaster happens, your interest rates and your principal is suspended for 2 years and then paid back afterwards. So it's not insurance. It's reshuffling the payments.
And the World Bank has actually announced.
And the World Bank has come out and is strongly supporting. Yeah. We support greater access to capital. But let me say one final thing. More access to emergency funds, like the IMF's Rapid Credit Facility using SDRs. But let me say one thing. Even though it's uninsurable, we need to find a solution because nobody's going to be investing in our economy unless we can offer insurance. And so we want to borrow from the World Bank and others to make ourselves more resilient. By resilience, I mean things like a stronger seawall. Seawalls are some of the most expensive pieces of public infrastructure.
Are they?
But they will change. They cost hundreds of millions of dollars. But with them, they save our capital city from being flooded several times a year. So we need to borrow money to do that, for which we need the development banks to do that. And we need insurance companies to work with us on their analysis of resilience and risk, so that when we create a more resilient infrastructure, they can reward those people who are benefiting from that with lower premiums.
Okay, so if I'm interpreting you correctly, you're saying you can't insure your way out of climate change, but you can. Insurance does have a role to play when it comes to building the infrastructure needed to adapt to the effects of climate change.
We have to build that infrastructure. Most of that does not generate a revenue. The private sector will not build the infrastructure for us.
Yep.
We need to build it, and we need to build it fast. There's no point being resilient in 20 years' time.
Yep.
So we're borrowing from the World Bank in order to build. So that's why we need the banks to be 3 times bigger to build this resilience. But what we found is, especially being a small place, when we build resilience, the insurance companies are not recognizing that. They're using sort of tables of what is the general risk, because we're too small for them to invest in that, in understanding our particular risk. So we need to work with insurance companies so they do invest in understanding those different risks and those different resiliences.
Okay, well, we have a very respectable member of the insurance industry here. So, Michelle, but before you answer Avi's provocation there, perhaps you'd like to just first of all talk about why you think that insurance plays such an important role overall in general terms in the fight against climate change.
What an introduction, by the way, and thank you very much. But I need to start with something. In 1945, when the world was reorganized, United Nations was created and things like that, and somebody decided to create a World Bank. You can ask yourself, why on hell didn't somebody think of creating a world insurance? And my problem is that all this dimension of risk capability, risk awareness, are definitively, and you say that at the beginning, that it is something which is very discreet in a conference about climate. And it shouldn't be discreet, because it's introducing transparency. It's introducing the price of decision taken and not taken. And I must say, when we started definitively approaching states, I've met many finance ministers. I've never met a finance minister with an insurance background. So one of the key issues for me is making sure that at political level decisions are taken, taking also into account not only the purely snapshot financially, but also the risk dimension. And we are probably partly responsible of that because we are a very discreet industry. I think successful but discreet. But definitively the way in which people leading the future of our countries do not totally understand what is the risk dimension is something which is a concern and is definitively a concern to us. I must say on the climate, what we contribute to, we pay claims. And the claims are increasing systematically. So there is definitively a dimension in which insurance is playing a role in the sense that we are paying claims. And we need to make sure that people do understand that the direction in which it goes, I totally agree with you, the concept of climate change is not insurable. But a lot of what is happening on this planet as a consequence of climate change is compensated, more in some countries than in others, by claims payment, which are so massively important because these events, the more you last to react, the most devastating they are. No, people are not always, if I may say, dying the day after. They're dying weeks after, months after. So the speed at which the money comes after a large catastrophe is something which is very important. And last comment, insurance makes things bankable. You can invest in something if there is an insurance. If an insurer comes to the conclusion that there is definitively no way in which something can be insured, then there will be no way in which people invest in that. So this level of transparency is a key element that we are bringing, and I still do believe that the spreading of the insurance in emerging economies would definitively improve the situation of many people.
Yeah, yeah. Okay, I'm going to ask Madeleine to speak next. There's a lot of things to unpack in there, but Madeleine, just quickly, from your perspective at Wellcome, why is insurance such an important aspect of climate?
So Wellcome's a health research funder, and it's historically invested incredibly heavily in biomedical research. If you think about the COVID, a quarter of the world's genomic sequencing was done by our institute at Cambridge, the Sanger Institute. So a very high investment at that end of the research scale. Having started climate and health program at Wellcome is an amazing innovation in many levels because it brings all sorts of research questions to heart. And the key thing is, like, our research now, whether it's upstream, middle stream, or further down the pipeline, it has to land in the real world. It's not going to make any difference if it stays in research articles, in the heads of research academics, etc. So we are very focused on transdisciplinary research, which has very clear outcomes. And insurance opportunities is something we're learning about. And it's been a great privilege to actually engage with the insurance community. This year, we've been working with the Geneva Association, working together with their health and life insurance group and their climate group, and trying to understand what is the communication that needs to happen in the health and life insurance around climate change, which has not moved very far to date. And the things that we've learned there are the current understanding of health and life insurance is that it's not an immediate, climate change doesn't immediately impact on their insurance activities directly. But indirectly, the risks are increasingly high because of all of the, not just direct impacts on health, but the impacts on the social drivers, the social determinants of health, which are, most of health is not coming from the health sector. It's really actually coming from the public sector through schools, roads, sanitation, all those areas, agriculture, food systems, etc. So insurance plays a role there. And the way we're structured, we still continue with our high-end biomedical research, but we have these three challenge areas. Climate health is one. We also have infectious disease and mental health. And mental health is an area which has been completely underinvested in, and we hope to change that. We've been working with our mental health team on a global dialogue of the impacts of mental health, how it's perceived by individuals and communities around the world in 7 regions. The report will actually come out in Barbados in March. What we've learned there, with the first thing that they sent me the summary reports, the top one was the value of insurance to farmers in terms of mental health. So there's some very direct correlates of the way insurance works and how it reduces mental health, stress, etc.
In other words, if your premiums are going up, it causes so much stress and anxiety when you rely on a farm for your livelihood and your family's livelihood. Is that the
No,
main
so I
link?
think the learning here was, there's been a lot of work on smallholder farmer insurance through index insurance, these parametric insurance products, etc. And when farmers are able to access that, the stress of an uncertain climate is reduced. So just the value of insurance in terms of health and well-being, if you can access it, is enormous. And that has come just directly out of our mental health dialogue.
And was that a surprising finding in the research?
I was kind of delighted, to be perfectly honest, because, in the agricultural community, everybody's focused on food security, etc. Health is really the ultimate outcome of good food, and the food system and people's livelihoods.
Yeah.
And here at COP, health has been absent effectively until this year, when suddenly we have Health Day, we have a galvanized health community working on climate change, which is finally visible. But it has to work in very practical ways. What does that actually mean in terms of the types of interventions that are going to work?
Yeah, very interesting. Now, Ethiopis, I think you're going to tell us that you're going to talk perhaps about a different role that insurance plays, particularly when it comes to, MEGA's role is basically ensuring that investors are able to invest in projects with a guarantee from MEGA that makes it much easier for these things to go ahead, whether they... but anyway, I'll let you answer the question.
So the question of why insurance matters is almost philosophical, but it's relatively straightforward from our standpoint. We were created to promote foreign direct investment into emerging markets. And there are certain risks investors just won't take, right? So our job is to reassure them that should the risks emerge, we will cover it, right?
And what sort of, we're talking about any breach of contract, war?
We're talking about risks associated with government action or government inaction. You're right, war and civil disturbance is one of the covers, but we cover expropriation, we cover breach of contract, and we cover a number of other issues associated with government action or inaction. And we have a pretty good track record in that, and Michelle is right, we were created in 1988 and not 1945. But since then, we have a pretty good track record of taking investors to unfamiliar markets, right? Having them allocate capital to projects based on the reassurance that should any of these risks associated with the government emerge, we will cover it. The key for us now is to think about some of these risks associated with climate that are connected to government action or inaction. We, for example, right now are considering whether or not there's a way for us to cover some of the integrity risks in carbon markets.
That's interesting.
That have to do with, for example, double counting, right? Can we cover that? Can we provide a guarantee to those who are buying the credits that it won't get double counted by them and by the government?
So if you went ahead with that, just thinking that through, that could have quite a transformative effect on the voluntary carbon markets.
It could, and that's what we're thinking about. And we're thinking about whether or not we can provide this cover not just on a project-by-project basis, but on a commoditized basis for credits that are traded on an exchange, right? So we're trying to think of how we apply our guarantees in new, innovative ways to address the climate change challenge. And carbon markets is one place in which we're thinking about doing it. The other thing that we're doing, for example, is we're working with mini-grid and off-grid operators who are quite keen to actually put projects in remote areas where energy access is a challenge. Their concern is that they'll put the mini-grid or off-grid in place, and they want to be sure there's enough time between when they put the project up and the grid gets to those communities so that they can get a return on that investment, right? So they want us to provide a guarantee against that kind of risk and work with the governments to be sure that they're able to actually get the benefit of the project. There's benefit obviously for the communities, but they want to get a return on their investment. So we're in the process of thinking about these guarantees that we've traditionally provided, adapting them to take into account some of the challenges associated with climate change that relate to government action and inaction.
Interesting. And what's the riskiest project you've ever guaranteed?
Oh, the riskiest project we've ever guaranteed from a climate standpoint?
Either. You can go first non-climate and then climate.
The riskiest
and
ones...
how are you defining riskiest? It's like after the event we found out it was really risky?
Well, I'm letting Ethiopia answer that in his own way.
We, for example, just recently provided a guarantee for Safaricom in putting in place a telecom system in Ethiopia in the middle of conflict, right? I think that would be defined as pretty risky, right? Because we're covering war and civil disturbance as part of the guarantee we're extending here.
And actually, if you hadn't provided that guarantee, do you think that there's any way that that project would have gone ahead?
Hard to say, but a good chance that it probably would have not.
Right.
Yeah.
Right. So that was a communications network.
Communications network.
What
yes.
about in climate? What's so far? It sounds as though you're kind of you're just starting off.
Well, in climate we do. I mean, I'm talking about innovations that we're applying, but in terms of what have we done with respect to climate? I'll give you an example. There was a project in Bangladesh. It's a gas-fired power plant that's in the middle of a floodplain. We had to spend time discussing with the sponsor the need to make that project resilient to floods. Something that they initially weren't prepared to do, but on the basis of the analysis we provided and the support we provided, they decided to actually spend the money to make the project resilient, recognizing that at the end of the day, they were not going to get a return on that project should that risk emerge unless they had actually prepared the project for floods.
Interesting, interesting. Okay, now, Avi, when you hear that, I mean, does that, to you, open up a new vista of potentially exciting projects in the developing world that could now be going ahead because you've got organisations like MEGA that are really looking more closely at providing these guarantees for risky infrastructure projects? Or do you think actually there's a lot more work that needs to be done?
Well, look, MEGA does a fabulous job. We believe MEGA should be 3 times bigger than it is today. And we believe MIGA should be exploring other kinds of risks. One of the biggest risks that blocks the flow of private capital to developing countries. And we need that. We need $1 trillion of private capital to flow to developing countries to transform their energy systems. And if that doesn't happen, we can't preserve the 1.5 degrees. So that's critical. And the reason why it doesn't come is because of macro risks and the perceptions of macro risks. They're paying in the marketplace twice the amount to hedge these risks in the marketplace than the actual risk. So we need an organization like MIGA, an expert who can take a long-term view, a more insurance-type approach to say, look, we've got the data on currency risk. A classic example is South Africa. If you want to do a solar farm in South Africa, the reason why you don't do it is because the cost to hedge the rand risk costs you 12% per year. That means this project has to generate a return 12% plus. The rand only falls 6% per year. So why are you paying 12 when the risk is 6? Because when investors go abroad, they're risk averse. They're concerned about the long-term risks and the uncertainty. We don't know what we don't know. And so we need people who are experts in the insurance business in developing countries, who can spread the risk across many developing countries, who can lower that cost of hedging. And that's key to unblocking the flow of private money. So it's very, very important. But on many of the other risks, we have a lot of experience. The Caribbean has the oldest regional risk pool in the world.
Yeah, just unpack, what does that mean exactly,
okay,
a
so
regional risk
a bunch
pool?
of countries in the Caribbean got together and said, look, we're gonna pool together our premiums to hedge ourselves from these regional risks. Countries. It was a first, and it spawned the African risk facility, and other risk facilities.
And has that basically allowed more insurance than there would normally...
So it worked very well at the beginning.
Yeah.
And it will continue to work for certain risks. But our view about climate being uninsurable is based on actual experience and evidence, not based on any theory. And what we found with our own risk pool that we helped to set up is that our premiums are rising exponentially, our payouts are falling as they restrict the risk in order for them to survive. And we're seeing in Florida, insurers are pulling out of flood insurance. In California, they're pulling out of forest insurance. So we need those insurers to be there for things that are insurable, but we need other things for the uninsurable.
And the other things are?
Like the things we talked about, make the system much more shock absorbing. Pause clauses, use of special drawing rights, availability of rapid credit facilities when a disaster happens. So one of the problems developing countries have is that when a disaster happens, they have no avenues for support. In a rich country, you could decide to do quantitative easing. Money's flooding into the government. You could decide to spend more money. A developing country, money is flooding out. So we have to raise interest rates in the middle of a crisis. We have to cut spending in the middle of a crisis.
Right.
So we need to make the system have much more flexibility.
Right, and
that's what
insurance is a
on.
part of that, but it's not going to be the whole replacement for it.
And if it's a climate risk, it's not going to work.
Yeah. Well, now, Michelle, in 2015, in Paris, when the Paris Agreement was adopted, there was, in fact, a big private-public partnership in insurance announced, the Insurance Development Fund. I'm curious to know, because Zurich's been involved in it, what's it actually achieved? What's it done? Can you just give us the elevator pitch for what it aimed to do and what it's achieved?
So globally on these aspects, let me just mention one thing that I do believe the insurance industry and this forum is definitively contributing to that, needs to evolve. There are three things that we are doing. The classical one is the protecting, the famous story in which you cash premium and you pay a claim when it happens. There is a second aspect, which is, in my view, quite important. It's preventing. We need, through the risk management capability that we want to see appearing, and that's one of the main targets of this forum, to make sure that among politicians taking decisions, there is a bigger risk management approach and risk awareness approach. We need to try to make sure that things do not naturally happen, that they can be prevented. And then you have the provoke element, and the provoke element is precisely the one on which I think I cannot be beaten on my right side. I mean, you're the best provoker I could imagine, telling that if you don't do things, simply there won't be a solution. And I think that's one of the key elements. Now, to come back on the achievements, there are 2-3 things which are very corresponding to the insurance industry, if I may say, which are risk modeling, because you can speak about risk all over the planet. If you don't model them, there will be nobody insuring them, there will nobody investing in them. So the modeling alliance, which has been created in the IDF, is something which is extremely important. There is a group resilience, global resilience index, which is also one of the achievements, which is supposed to complement, if I may say, some of the pure financial snapshots which are covered by the rating agency. It's very nice to have a rating agency telling that this country is in a perfect shape, but it's a snapshot financially today. Is it resilient? Is it resilient? No clue. And I think this Global Resilience Index is a nice complement to these financial snapshots.
So you're actually doing the work that Avi was talking about earlier, that saying that the insurance industry needed to do. You're actually already doing some of the modelling, and this index sounds as though
definitively.
It's actually, so just in very simple terms, does that mean that the industry has a much clearer idea of which countries have what sorts of resilience and which don't? You know, where the hotspots are, where the danger zones are, or is that really what it boils down to?
Well, that's definitely one of the points, but the point is that once you have identified it, you need to go into the details so that you have all the models which are needed in order to attract investment, also to make insurance possible.
Okay.
You know, it's very nice to say that there is a big risk of flood there, but okay, what do you do with that? So if you model that, you can probably elaborate even a financial product, you can elaborate an insurance product, which may attract investors who probably have a certain interest in risk, which will bring money to this situation when it happens. I just would like to complement the fact that all these aspects at the global level need to be complemented by local actions. And local actions are also a very important part of IDF, in which you need to protect, I don't know, we had in Peru, in Latin America, farmers' protection against flood. In some countries, the protection of schools, infrastructure. You need to be as concrete as possible on the spot if you want to be credible.
Yeah.
And I think that's something on which we also try to contribute to the development of the local insurance industry.
Sure.
It needs to be global.
Yeah, no, that's a very good point. Ethiopians, would you like to come in?
I wanted to tie the 2 points and sort of highlight the opportunities and the challenges. So we've established a partnership with IDF, the Insurance Development Forum. And through that partnership, we were looking to address a particular challenge and a challenge that's faced by Caribbean countries. So we support lenders, commercial lenders, to public sector projects around the world, including in the Caribbean. And together with the IDF, we were trying to see whether or not we could establish a joint product, one whereby we provide support to these lenders. It's a credit enhancement product, but marry that with parametric insurance so that...
So parametric insurance, just for those of us who are not steeped in these terms.
I'm going to get there.
Okay.
So that when a climate event occurs, there's some sort of disaster, the parametric insurance would actually service the debt, and the public sector project could take its funds and its monies to deal with the crisis, right? The challenge has been establishing what are the triggers for that insurance payout, and what's the price, right? And it could be quite meaningful if we could actually bring these products together for these public sector projects so that, you know, when they're dealing with a crisis, they don't have to worry about continuing to service the debt. But the pricing has proved quite challenging, and now we're sitting down and talking to some agricultural crop insurance outfits to see whether or not any of their learnings could be applied in this particular context. But here's how, as insurers, we're trying to address a problem, but you see the issue, and I see Avi smiling on the end, and that's really around what are the triggers and what's the price, and we haven't been able to sort that out yet.
And how long have you been trying to sort it out?
6 months.
Oh. And, well, so you're
How much longer are we going to take?
how long are you going to give yourselves to sort it out?
That's why we concluded that you can't do it.
Sorry?
We concluded you can't do it.
Right, you don't think they're ever going to be able to sort it out?
That's why we have what's called net present value pause clauses. And let me explain what that is. So what you're trying to do is trying to work out what is the premium to pay for this insurance.
Yeah.
And because our experience has been this is uninsurable, that premium is going to be significant and going to rise. And when the IDB came and offered us contingent credit facilities in the event of an event, we would get a grant or something, they had to price it. And what we found with these pricing is that they kept on rising. So we need new products. So our pause clauses cost nothing because they're not insurance. The creditors and the borrowers are both no worse off or no better off. All we've done is change the payments when the payment is. It's a type of insurance, but it's not an insurance that gives you a payout.
Yeah.
It gives you liquidity. It moves the timing. Maybe we should call it insurance, but a different kind of insurance, liquidity insurance. It provides the liquidity, the cash, just when you need it, but you pay it back when things have recovered. And that's what the World Bank has just announced that they're doing. And we had to work with them because their original solution was something that they would charge for. And we said, well, the whole point of it is you can't charge for it. It has to be zero cost.
Has it been possible to do that with commercial lenders? That's the problem we're trying to solve.
Yes, all of our debt is held by private creditors.
Okay.
Almost, 85% of our debt. Now, we were able to do that, and it was quite a negotiation, and we could talk offline about the negotiating with the private creditors on that. But ultimately, they accepted. So we are the world's largest issuer of sovereign bonds with pause clauses in every single bond. And that required some persuasion, but it cost there's no premium for that. Because all we're doing is changing the time of the payments.
Yeah.
Can you allow me just a small comment on, money is there, to be honest, when you speak about some of the catastrophe. What is terrible is that more than 90% of the money comes once the drama has happened. You would invest the same amount before, it would be 5 times more efficient, if not 10 times more efficient. So money is there, but money is invested just to cure something which has happened instead of preventing it to happen. And that's probably one of the key contributions that the insurance industry needs to bring. Well, community, I don't want to separate us from the rest of the community, that we need to bring. We need to make sure that we put money on the table to avoid things to happen, instead of expecting terrible pictures on the TV that the money flows for people who are already dying.
Yeah.
And that's a disastrous human tendency to wait that it happens instead of prevent it to happen.
Yeah. And your work at Wellcome, Madeline, I'm sure. I mean, that's really the burden of what your research is showing you from the sound of it.
It is. And it is part of also this development of early warning systems, which allows some of that prevention or the finance to be put in place ahead of time. But part of the challenge of the early warning systems, if you don't build the response systems properly, then they're not going to do anything. So just, building that early warning response system. And for health, that's really key. We are looking at that in particular on infectious disease. We have a lot of capability in-house to doing that, but also within our climate and health team, heat early warning systems, because we know those temperatures are going to continue to rise, but they don't rise in a linear way. We have
an example of those early warning systems. So when Dominica was flattened by Hurricane Maria, they lost 226% of GDP in 4 hours. We got all these experts in, and me being an economist, I thought, well, a resilient bridge means a heavier bridge, a bigger bridge. And some engineer said, well, hurricanes don't happen spontaneously. What about a collapsible bridge? Early warning indicator tells you a hurricane's coming in 2 hours. You collapse the bridge, hurricane goes over, open back up the bridge. Because trying to build a heavier bridge for hurricanes are getting stronger and stronger and more frequent might be exponentially costly. So these early warning devices, if we can also marry clever, smart responses, and these are all kinds of new types of, they're like physical insurance. as opposed to financial insurance. We need a multiple sources of these kinds of things.
Yeah, very interesting. I actually wanted to ask the audience, if you have any questions, just raise your hand. We do have a mic. Just before we do that, though, there's one thing I did want to cover before we went to any questions. One of the first announcements at this COP was about the operationalisation of the Loss and Damage Fund in record time for COPs, and the World Bank's actually going to be hosting the fund. But Ethiopia says that, is MEGA going to be involved in any way in the fund? Does insurance have a role at all to play in this fund, as far as you're aware?
As far as I'm aware, not. There have not been any discussions to date with respect to a role for MEGA. Obviously, the bank is going to be administering the fund, and there's a whole governance mechanism that's being put around it to decide the allocation of the funds, and that governance mechanism is being discussed among states at the moment. But to date, no discussion of MEGA playing a role in the Loss and Damage Fund.
And Avi, you were involved in the negotiations that led to the decision that we saw at COP28, and there was a push from some countries to have much more of a role of insurance in it. But it's, as far as we know at this stage, it's probably not going to play a starring role.
No, and one of the things that we as a climate vulnerable country, and it's not just the Caribbean, is half the world is now climate vulnerable. We always see these sort of fairy tale ideas of magical finance that will solve all these problems without anyone having to put up any money. They're very attractive. And so we're very skeptical that they will really make a difference. So there's been the idea of a global shield that will somehow protect countries from what is an uninsurable event. And they're focusing the global shield on some of the smallest states because they know they cannot provide a global shield for half of the world's population at an exponentially rising cost. And we don't want things that are going to prove to fail in 5 years' time, because we need to build things now. We need to build our resilience, financial resilience, economic resilience, physical resilience now.
Yeah. Okay. Anybody with any questions in the audience? Yes, the lady in black.
Hi, my name is Anna Farina. I work for START Network, and we are a network of organizations, and we do use insurance products in the humanitarian sector. I have two questions. One is about what Michelle said about putting money on the table before the crisis happens, which is, one of our life motive. We work in anticipation of disaster using disaster risk finance system. And one thing we are still struggling to find in the insurance sector is products that can trigger based on forecast and ahead of disasters, especially for quick onset crisis. We work in Africa with ARC replica, and the insurance is triggered when the disaster has happened. And we always think because we use parametric model and we deploy our internal funds ahead of crisis, we always think, would it be possible for an insurance doing the same in order to prevent and to deploy money to the population ahead of the crisis, because protecting is always cheaper than rebuilding, and also because the dignity of the people is saved in this way, because you provide support before the crisis hits.
Okay, so that's really, that's the point that Michelle was making, that if the money could be used beforehand rather than after, it would be much more effective.
Okay, thank you. My name is Ekoswehi Iyahe, and I'm the Secretary General of the Insurance Development Forum. I just wanted to add a comment and a quick question, which is that, within the Insurance Development Forum, a lot of our work is about ex-ante financing. And oftentimes we conflate this about just thinking about traditional insurance. And so what we are trying to do is actually, as Avi and Michelle had said, and also Ethiopia's, expand the suite of instruments that we are talking about, prearranged financing, looking at transparency of triggers to actually get resources out the door. So I just wanted to offer that as a little bit of context to why we're having this discussion here. But I also wanted to ask a question actually to Madeline. You're leading some really incredible work at Welcome, and your experience given COVID-19 with the pandemic, right, and structuring different types of financing instruments to respond to that event. What are some of the lessons that you would like to see perhaps carried into our thinking of the development of financing instruments given climate change? If you can just shed some perspective.
Yeah, so there's several strands to that, and I'm not au fait with all the ways that Wellcome responded to COVID financially, but obviously, as an organisation, we're a wealthy philanthropic organisation. We have an in-house finance team, so they deal with all the companies that they own, etc., which was a fantastic opportunity, actually, because they had all of the expertise in-house with our CEO at the time, who's a COVID and infectious disease expert and was very much engaged in the early stages of COVID. So there was a lot of in-house knowledge of how COVID was going to impact globally on society. And so even just sharing that information and making sure that that information is available to others was, I think, a critical role for Wellcome. And then the other things were what are the investments that we made immediately? What were the research investments that were essential to the moment? So the big investments that we made directly were around what was called the accelerator, and it was really focusing on tools and technologies and drugs that would protect people as opposed to the vaccines. Like, what did we need immediately in the hospitals? So that was a very important startup, even just testing out, as COVID patients were coming in, what was the right way to triage, what was the right way to provide initial support. The other thing is actually a lot of what Wellcome really contributed was from its long-term investments. The RNA vaccines didn't happen overnight. They weren't built in a year. The Sanger Institute is a 50 million pound a year institute for us. It's a big sequencing has a big sequencing capability. It was immediately switched on to COVID. So it was the research investments, the historical investments in an institute that had the capacity to support COVID response. A lot of COVID staff actually landed up on the SAGE committee with government, obviously led by our then CEO, Jeremy Farrar. And on top of that, we turned the whole place into a respite place for the hospital next door, with the staff being out. So every aspect of the organisation was kind of put to support COVID. In terms of the pooled funds that were created, I think one of the things now, Wellcome is going through a lessons learned, and it's not complete. But it's challenging for different funders to come together in a very short time to create new funds when they have all of the due diligence, the regulations that each organisations have. And I think what was successful about our grant funding is where we were able to supplement grantees that were already working in this space, because then it's very easy to transfer money, the due diligence is already done, we have confidence in that community, etc. So when we think about in a climate change context, are we going to be developing emergency response capability? I'm not sure, but we should be thinking about how when we need to understand something, where we need to put research at the service of a major response, like how do you respond, what happens in the field, how should you triage this type of situation. We have invested in that before, but we need to have that kind of prepared ahead of time. It's not easy to do that when a crisis starts. So prior investments really make a big difference.
That's really interesting. Yeah, very interesting. I mean, very thought-provoking and interesting to see what sort of research streams you end up going down, because a lot of the conversation today, I think, has certainly made me think about the sorts of areas that could profitably be explored. Annoyingly, we are out of time. I feel as though we've only just begun to scratch the surface, as is always the case with these discussions when we have such a brilliant panel. So please join me in thanking our excellent panel for a terrific discussion on this.